You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 18th day of July, 2024. Thanks so much for joining us. Wherever you are, wherever you are, we're just glad to have you right here, right now. Speaking of Thursday, tonight is our members-only workshop. Every Thursday night, 8 p.m. Eastern. Obviously, if you're on the trial, you have to become a member to get into the members-only workshop. But the good news is, there's still plenty of time left in the day to make that decision if that is the right decision for you. So shoot off an email to support@cfrn.net or ring us up at 949-42-EMINI and just say, hey, I'm in. Now, you should have gotten an email either yesterday or today, maybe both, with specific instructions on how to become a member and even a payment link to click. But if you did not, and you do want to become a member, and you do want to be in the workshop tonight, by all means, let us know. We'll be happy to accommodate. Now, we do 2 live broadcasts every trading day. First live broadcast, that's our live training room. It's 2 hours. It's an interactive environment with Michael putting on, taking off trades live in real time, explaining every move he makes, every trade he takes, and the rule behind it. While you are trading along in your demo account so that you can learn the strategy and qualify to eventually go live. Now, that live training room is reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael comes on in a little bit, he will show you exactly how to do it. It's a piece of cake. He'll walk you through each little step. And then, once you've filled out the registration form and hit the submit button, we'll get your desktop set up today, get your indicators indicating today, and then tomorrow, Friday, will be the first day of your trial, but not the last day. No, the weekend won't count against you, even though there are markets that trade over the weekend. So you'll get Friday of this week, you'll get Saturday and Sunday, but they don't count against you. And then you get Monday through Thursday of next week. So when Michael comes on, be sure and pay attention. He'll show you exactly where to go and how to take the free trial. Now, we call it a free trial, and it is free to you. There's no credit card required. It's not free to us. It takes our time, our energy, our resources, our mentoring. But hey, That's the cost of doing business in America, right? Okay. What we want is for not for you to buy a pig in a poke, but we want to let you poke the pig first. In other words, we want you to have a clear mind, not worried about money, where you enjoy not only the live training room, but every resource that our members have access to for 5 consecutive trading days. Then at the end of your trial, you'll be qualified to make a well-informed and intelligent decision as to whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and we come back for this broadcast at 12 noon Eastern. This broadcast, unlike the first broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's a couple different ways you can join this afternoon broadcast live. I'm going to give you the best way first. You only got to do it once. Go to mytradingiq.com. Scroll down the page to where it says afternoon broadcast. Click the link, fill out the 30-second registration form, and you're done. Not only will that get you in the same day, but every trading day going forward, you're going to get an email about an hour before this broadcast starts. Inside that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. What's the benefit of that? You'll have access to the question box so that you could ask questions and be a part of the discussion. Of course, there will be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're just busy, you can't join live, but you definitely want to get caught up later. You can do both of those via our YouTube channel. And it's very easy to remember. youtube.com/CFRN. You already have the YouTube part memorized, so really, just remember CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, week, year, do the same thing. Now, obviously, the more recent broadcasts are going to be more relevant to what's happening in the market right now and in the world right now. However, you can literally see how we've evolved over the years. In fact, you can go back 8 years total. YouTube.com/.
The broadcast is now starting. All attendees are in listen-only mode.
CFRN. Well, somebody forgot to hit the start broadcast button. However, those of you on YouTube, you got it all. So many buttons, so many levers, so many knobs to turn. I can't believe I just did that. But I did. So, let's keep rolling. The enemy would love nothing more than for me to get frustrated right now and stomp my little feet. What would that change? Absolutely nothing. So I will not give him that power. We'll just keep rolling like nothing ever happened. Besides, the whole thing's going to be on YouTube. It's on YouTube right now. We're now multi-streaming, dual streaming, simulcasting. That's the word. Yeah, we're simulcasting both on our platform. Now that I've hit the start button, and on our YouTube channel, as we do every day. Okay. Now, here's the schedule. We start out each day with our daily devotional, word of prayer. I share the important news of the day with you. I then get into a recap of the Logic 247 alerts and the concierge trade alerts. And Michael will show up about 12:45, 12:50-ish. Give us a recap of what happened in the live training room this morning. Then we'll go live on the TradingView platform. And hopefully today we'll actually get some live trading done from 1 to 1:30. I'll come back, finish the recap of the alerts, and wrap things up with our good word for the day. So let's get into it. Now, the topic of this week's devotional, the recall of heaven. That doesn't make sense if you missed day 1, day 2, and day 3. But they're out on YouTube, so you can go check them out if you want to. Today's scripture, it's a bit of a repetition. Now, yesterday I gave you a long scripture, but this is just a part of it. We're going to focus on a part of it. It's John 21, verses 3 through 6. And I'm going to share it from the Message translation. The rest of them replied, "We're going with you." They went out and got in the boat. They caught nothing that night. When the sun came up, Jesus was standing on the beach, but they didn't recognize him. Guess you forgot to shave, I don't know. Jesus spoke to them. "Good morning. Did you catch anything for breakfast?" They hung their head and said, "No." He said, "Throw the net off the right side of the boat and just see what happens." They did what he said. All of a sudden, there were so many fish in it, they weren't strong enough to pull it in. John 21, verses 3 through 6. So let's talk for a minute about purpose. It's remarkable what all these men had in common, these disciples. In moments of insecurity and doubt, they questioned their calling. Let's look at the qualifications of some of those whom Jesus called back after his resurrection. Simon Peter, who would later preach to about 5,000 people under the power of the Holy Spirit, had denied Jesus 3 times, just as Jesus had prophesied. Peter was called to be the rock upon which Jesus would build his church. Yet, because of fear and doubt, maybe you have a little of that in your life. I think most of us do if we have a pulse. Even though he had fear and doubt, Jesus put a recall on his life. Remember, he's the one who denied Jesus 3 times. But Jesus put a recall on his life because he wasn't living according to his purpose. Peter was called to be a fisher of men. But in a moment of doubt, he said, I'm going fishing for fish, relying on his own strength and comfort rather than God's call on his life. Now, the call of God on your life is designed to make you uncomfortable because it requires your faith to be stirred up to believe in provision, healing, and restoration. You won't fight for these things in a comfortable place. Peter had influenced others to follow his example of not answering the call when he went back to fishing. But after answering God's recall, he influenced many people to be bold for Christ, even to this very day. Thomas, who also was convinced not to answer the call in a moment of doubt. Nathanael, who had acknowledged Jesus as the King of Israel early on, but initially doubted Philip's claim that the Messiah had come from Nazareth, was also influenced. Nathanael's presence served as a reminder of God's faithfulness, reminding the disciples that if Jesus turned water into wine, he could fulfill his promise of rising again. So, amid this mess we call the disciples, after they had turned their backs on God and ignored his call, Jesus shows up. And friend, he shows up today. He calls out to you today, asking if you have had success following your own path. Have you found pleasure and peace following the world's call, excluding God from your plans? How's it going with that house, that new car, that new career you didn't consult him about? In the same way, Jesus asked the disciples if they had caught anything following the world's calling. Many of the disciples were fishermen by trade, but not by God's calling. When Jesus showed up, he gave them a heaven-sent call. Now, when you answer the recall of heaven, it's because life has diverted you from your true purpose. Jesus commands you again to see if you will obey his voice. When the disciples obeyed, they caught so many fish that the net broke from the abundance. When you and your family answer God's call, he is determined to bless you with overflow in your life. Nothing lacking, missing, or broken. He has made up his mind to restore you for the call on your life. He will put his vision in your eyes and his heart over your heart. Join me in a word of prayer. Heavenly Father, come before you today with hearts filled with gratitude and trust. God, just as Jesus guided his disciples to cast their nets on the right side of the boat, leading them to an abundant catch, we ask that you guide us in our daily lives. Help us to listen to your voice, to follow your direction, and to have faith in your provision. Lord, teach us to be patient and obedient, knowing that in your perfect timing, you will provide all that we need. Strengthen our faith so that we may see the miracles you are working in our lives even when we are weary and uncertain. Oh God, we thank you for your unwavering love and guidance. May we always seek to follow your will and trust in your promises. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Thursday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices, as they're called. Now, if you haven't looked at the charts yet today, you may want to sit down if you're faint of heart. The Dow is down 335 points, almost 1%. NASDAQ down 193, over 1%. S&P 500 down 42, 0.75%. And the Russell 2000, our man in the street, down 18 points, almost 1%. Were any of our traders surprised this morning when this happened? Well, if they've been following along in the discussion group, they were not. And if you've been watching this daily broadcast for the past week, months, then no, what happened today came as no surprise. In the commodity basket, crude oil up 35 cents, trading 83.20 last. Gold up $3, trading 24.62.90 last. Silver down 18 cents, trading 30.19 last. In the Asian markets at the close, the Nikkei fell again. At least this time it didn't break 1,000. Today it's only down 971 points, almost 2.5%. Man, the Nikkei has been tore up from the floor up for a week now. Shanghai up 14, Hang Seng up 39. And in the European markets at the close, FTSE up 17, the DAX down 82, the CAC up 15. So we had a mixed day in Asia. It was a mixed day for the UK. But it is a blood in the streets red Radio Thursday here in the US of A. Now don't freak out, because that's how markets work. We've been so long overdue for a solid sell-off. It may go a whole lot deeper, but don't worry. If you're trading the indices, they always go higher over time. Yes, there will be crashes and retracements and sell-offs, but the way the indices are designed, and I'm not going to go into that full-blown discussion like I normally do, because I've done it so many times, but the indices, based on their design, will always go higher over time. Now, there are very few certainties in the world of trading, but what I just said, that's a fact. And off air, if you want to discuss it and have me explain it to you in detail, I'll be happy to. All right, let's hit the news. Stuff out there is going to freak you out. Not really. Weekly jobless claims rose more than expected last week in the latest sign of a cooling labor market. New data from the Labor Department, or Department of Labor, showed 243,000 initial jobless claims were filed in the week ending July 13th, up from 222,000 the week prior and above the 229,000 economists had expected. This tied with a weekly jobless claims reading from June for the highest level of weekly filings since August of 2023. Meanwhile, the number of continuing applications for unemployment benefits hit its highest level since November of 2021. With nearly 1.87 million claims filed in the week ending July 6, up from 1.85 the week prior. Jefferies U.S. economist Thomas Simons reasoned that part of the uptick in weekly claims could have been caused by Hurricane Beryl displacing workers. Still, Simons noted that the trend in recent weeks for jobless claims has reflected more cracks emerging in the labor market, or one leg of the Bidenomics stool. No, I mean the kind of stool you sit on. Over 3 decades on Wall Street, Jim Covello has learned how painful it can be to bet against an inflating tech stock bubble. This is from Bloomberg. The market has a way of minting riches month after month, even after it's clear the latest breakthroughs aren't playing out quite as expected. It happened with dot-com companies in the late 1990s, and more recently with cryptos. And Covello, the head of equity research at Goldman Sachs, says it'll likely happen with artificial intelligence too, making it dangerous, if not outright foolish, to start wagering against the likes of Nvidia Corp. And yet, he has no doubt that the reckoning is coming. It might not be this year, or even next year, for that matter. But at some point, he says, it's going to happen. As he sees it, the hundreds of billions of dollars companies are plowing into AI won't set off the next economic revolution, or even rival the benefits of the smartphone and the internet. And when that becomes clear, all the stocks that have surged on the back of its promise will all come tumbling down. The question is, will they be able to put Humpty Dumpty back together again? Moving on, Donald Trump has had a surprisingly solid summer, raising the odds for now that he will win a second presidential term. That's why financial markets are reawakening to the Trump trade, with varying implications for stocks, bonds, cryptos, interest rates, and inflation. Trump's upturn began with the June 27th presidential debate, in which President Joe Biden's bumbling raised more questions than ever about his age and stamina. Ever since, a swelling chorus of Democrats have been calling for Biden to withdraw and let, I can't even believe I'm saying these words, Kamala Harris take on Trump. That's not a fair fight. Trump survived a July 13th assassination attempt, as we know, and appointed the first millennial to a national ticket by choosing J.D. Vance. Man, I love that guy. I love his life story. I said yesterday I've watched the movie and I'm going to watch it again, and you know what? I'm not the guy who has a wall full of DVDs of movies that I watch over and over again. No, I'm always on the lookout for something new, like Neon Highway. If you haven't watched it, go watch it. But this one, I want to watch again, because I'll watch it this time from a completely different point of view. Trump himself seems to be steering to the center, perhaps in a bid to win swing voters and mainstream business backers. And in an interview with Bloomberg Businessweek, he sought to calm Wall Street fears of chaos in a second term. He said he'd probably keep Fed Chair Jerome Powell in the job through the end of his term in 2026. Now, he's the president, not me. But he goes on to say, especially if I thought he was doing the right thing. Ah, there's the caveat. Now, what's the right thing? Lowering interest rates, but only during a Trump presidency, not in the fall when it might help Biden. Trump tried to reassure investors there would be no unusual inflation caused by new tariffs without explaining how he'd work that magic. Well, if anybody's the magic man, it's him. Now, this disturbed me deeply. He even suggested he'd consider Jamie Dimon, the modern day Willie Sutton, for Treasury Secretary, which would put a Wall Street eminence in the job, should Dimon accept. Do you have any doubt if given the shot he would not accept? I don't think so. Election scenarios are now nudging earnings and inflation off the radar screen as top investor concerns. Animal spirits have taken on a whole new head of steam because of this growing feeling that Donald Trump is going to emerge victorious. No wonder investors are foaming at the mouth. I didn't write that. Just saying. All right, here's the one to freak you out. The national debt is on the cusp of a grim milestone, but it's one of the least discussed topics at the Republican National Convention this week. So far, Trump hasn't spoke tonight. President Joe Biden hasn't mentioned it much either, as he has campaigned across the country. Outstanding government debt stands at $34.9 trillion. That figure is accurate as of Tuesday, according to the Treasury Department. There's a debt load that now represents over 120% of our GDP. Earlier this year, the cost of interest payments alone passed the cost of defense spending. The psychologically important 35 trillion milestone will likely be crossed sometime between this week's Republican National Convention and when the Democrats gather in a few weeks in Chicago. Meanwhile, debt will continue to grow by an average of about $8 billion a day. All told, the debt could represent 166% of America's GDP by 2054. Meta platforms. Remember when Google came out with their glasses and they were very expensive and they didn't work so well, and so they just kind of stopped talking about them? Meta Platforms, which is Facebook, is in talks to take a minority stake in the maker of Ray-Ban, my favorite sunglasses, as the Facebook owner intensifies its push into smart glasses. Meta, which has collaborated with EssilorLuxottica on Ray-Ban Meta Smart Eyewear, is considering a stake of more than 3% and as much as 5% in the luxury eyewear group, which would be valued at about $4.9 billion at current prices, according to people familiar with the discussions who, you guessed it, ask not to be identified. There's no guarantee that an investment will take place, they said. A spokesperson for Meta did not respond. By taking a stake in this company, the social media giant would deepen its partnership with the world's biggest eyewear company. It would also presumably gain more influence over a business that's key to its virtual and augmented reality efforts and strengthen its position against rivals. Snap Incorporated has been experimenting with mixed reality spectacles for years, while Apple released the Vision Pro headset earlier this year. So what are these glasses supposed to do? Honestly, I don't know. Okay, let's talk real estate real quick. I got to pick up the pace. Blackstone's president, John Gray, said that the world's largest alternative asset manager is ready to pounce on a pickup in property markets. Cost of capital has begun to decline, which should be further helped by Fed cuts later this year. Blackstone's earnings were weighed down by mixed real estate results as elevated interest rates crimped returns and investors pumped less money into the business. I found myself yesterday searching for abandoned commercial property that I could buy for pennies on the dollar. Because just like the indices, real estate always comes back. Not for the same reasons and without the same guarantee. But history has shown that it does. Okay, last piece of news. Stocks came under renewed pressure as big tech failed to prop up the broader market. We've been warning all along. A market cannot exist on the back of 7 stocks. And we're starting to see the cracks. The euro fell on bets the European Central Bank will cut rates in September. While most of the S&P 500 companies rose, the gauge was unable to hold its gains as giants Apple, Microsoft, and Amazon sold off. It's even after a solid outlook from chipmaker Taiwan Semiconductor. Streaming giant Netflix is due to report results after the market close. Now, I talked to you yesterday about what Microsoft and Apple have done. And their actions are treasonous. Now, Biden laid down a policy. No more letting the Chinese use our technology and semiconductor chips. In other words, we're not allowed to ship them over there. So what Microsoft and Apple do? They invited the Chinese to use their massive cloud computing space. I think if Trump takes office, he should take those companies away. They should become owned by the U.S. government because those companies have created treason and insurrection against America. Let everybody keep their job. Let everybody still get paid. But the hundreds of billions in profits they generate every year goes into the U.S. Treasury's coffers, and maybe you and I don't have to pay so much tax, and we could even afford a carton of eggs at the grocery store. On average, Microsoft and Apple pay 8% in taxes on a yearly basis. What tax rate are you at? Okay. In brighter news, Logic 247. That's our 24/7 around the clock E-mini alert service. It's not just E-minis. It's also crude oil and gold and silver and euro and bonds. We're currently in week 311 since we rolled it out. And over those 311 weeks, we've issued over 17,200 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did this recap this morning at 8:15 a.m. Eastern. Trying to remember if I added any. I think I did add some alerts early this morning. Okay, so she will update this recap this afternoon or this evening, or both. At the time she did the recap, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 64 alerts. One never triggered. Still waiting on the outcome of 18. That gives us 45 actionable alerts, of which 4 or 9% would have been stopped out. Again, based on market structure and that very simple process we teach all of our passport holders. Now you see this one, this is never triggered, okay? That doesn't mean it's no longer a valid opportunity. It just means that since I posted it probably way back Sunday night, it just hasn't triggered yet. Here's what I want you to understand. That one that never triggered, okay, it remains a valid opportunity until it is triggered. Whether it takes a week, a month, a year, or a decade, or beyond. It is a valid, gotta understand how windows of opportunity in the market work. And that's what I use the logic alerts for, to teach you how to read a chart. Just as when you began school, you had to learn to read the English language if you were born in America, so that you could learn all the other subjects. Got to be able to read the math textbook and the science textbook and chemistry textbook. You got to learn how to read. Okay, most traders, when they first look at a chart, it seems like chaos. But once you've been around a while, you kind of feel like you might have it figured out. What I use the logic alerts for, and I showed them all to you yesterday, so if you missed yesterday's broadcast, you can go on YouTube and watch yesterday's broadcast. I showed you every one of the alerts that had been issued so far this week. Okay, they all have an entry price, an initial target designed to help you get your goal for the day, then additional targets, then a final trade to target. I teach you how to use those to learn how to read the chart so that you can do exactly what I do. I want to get you to the point where you don't need my stinking alerts, because you can look at a chart and see the opportunity yourself, wherever it may be, in whatever market it may be, because price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. So, fantastic week so far. I still have 1.5 days to screw it up. So, what was it Obama said about Biden? Never underestimate Joe's ability to screw things up. Yeah, the same could be said of me. So, I'm not going to get too carried away with myself. Once you learn to read the chart using the Logic 247 alerts, then you graduate to our original alert service. I was kind of ahead of my time there. The concierge trade alerts. Now the logic alerts, they can come out anytime around the clock, 2 a.m., 2 p.m., because futures trade around the clock and we have traders around the globe. Our day session is their night session and vice versa. CTAs are posted as a static report each evening shortly after the Globex Open. We all know today's the Thursday session, but unless you're a futures trader, you may not know the Thursday session began last night at 6 p.m. Eastern. 15 minutes after the open, all of our members and trial members had every one of these targets. And I think as we go through these individual markets before this broadcast ends, you'll find it very interesting if you've never seen it before. Now, what do you do with this report when it comes out? First thing you do is go to the 30-minute charts of the markets that you actually trade. Make a note where price is or was at this time of publication. It'll always be between these two numbers. So make a note on your 30-minute chart, then draw a line in the sand at the long target, line in the sand at the short target. Those will serve as great visual cues to keep you on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. Now the BBC is the green line you'll see on all my charts. On my daily chart, on my 30-minute charts. It stands for bull, bear, cross. When price crosses above my green line, I'm bullish and anticipate higher prices. When price crosses below the green line, well, then I'm bearish and anticipate lower prices. Now that's always relative to whatever time frame you apply the BBC. Daily, weekly, monthly, 30-minute, 5-minute tech chart, range chart. Tracking with me? Okay. Now, this is where we find out if you really learned what I tried to teach you with the logic alerts. Because now you start looking left to spot your own entries and your own targets. And you learn how price behaves at a weekly trading zone. We've published the weekly trading zones for our members every week since December 14th of 2009, closing in on 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published Monday morning, carved in stone for the entire week, do not change in any way whatsoever. Now here's an important thing you need to know. From the moment the markets open Sunday night till they close Friday afternoon, price is always trying to reach a weekly trading zone. If price is above the 30-minute BBC, it's trying to get to the zone above. If price is below the 30-minute BBC, it's trying to get to the zone below. All alerts, logic, and concierge are created on the 30-minute chart. I call it my roadmap. I execute on a smaller time frame, but my trade ideas come from the 30-minute chart. So what's special about a 30-minute chart? Nothing. I could use a 29-minute chart or a 49-minute chart or a 72-minute chart. It's just the time frame I chose many years ago, and I've just stuck with it. It's not broke, leave it alone. Now, beyond everything I've said, you got to resist the urge to complicate things. All those things you bought in the past that cost you a ton of money, never made you any money, let them go. If what we have doesn't work out for you, you can always go back to that stuff. It'll still be there. But if you clutter up your chart with a bunch of stuff from someplace else, it's not going to mesh with the stuff we provide you and the stuff we teach you. You're going to hear us say things that you've never heard said anywhere else before. Should you question it? Darn tootin'. You should question it, and you should road test it. See if it stands up and salutes in the light of day. If you'll go through that process, then that tidbit of knowledge is not just something you heard somebody say. It becomes yours. You own it. And that's the sound of my dear friend showing up.
I am here. Here I am.
Now, guys, when I come back, we're going to go to the daily chart, and then we're going to go to each one of these individual markets on a 30-minute chart. But right now, Michael's going to give us a recap of what happened in the live training room this morning. Then we'll go live on TradingView for 30 minutes and do some live trading. But I'm just getting started, so I'll be back. Got lots more for you. And of course, I'll always wrap things up with our good word for the day. Michael, your charts look nice.
All right. Thank you. Here we go. All right. Good afternoon, everyone. Today is Thursday, the 18th day of July, 2024. So if you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. When you click on that purple button, it's going to bring you to this registration page right here. On this page, after tomorrow, all these will be populated, but on this page, all we ask for is your first name, your last name, your email, your phone number. There are 5 multiple choice questions, and down here at the bottom, if you have a Ninja Trader machine ID, give it to us here. If you have a TradingView login ID, give it to us here. All right, click on register, and once you do that, you'll be sent everything that you need to get into the room and to get your indicators activated. I mean, to get your indicators showing on your screen, indicating before you start the trial. All right, so we had a pretty good day today. I ended up, again, I got into another rabbit hole today, but I think it was a good one. I always think they're good ones. Anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 18th day of July, 2024. We made 170 ticks on the NQ, 33 ticks on the Russell, 7 ticks on the YM, and we lost 8 ticks on the ES. That put us at plus 950 on the morning session. Today it took 16 minutes and 4 trades to get to the goal for the day. At that point, $1,900, and we took a total of 15 trades this morning. So on the month now, we're up $6,027 over 13 trading days, averaging $463 per contract per 2-hour trading day. Hang on, so put something back on over there. All right. On the year, we're now at $53,112. And that is over 133 trading days, averaging $399 per contract per 2-hour trading day. Now, that's not really 2 hours of trading. Today, it was probably more about 45 minutes of trading, and it's getting to be that way more and more. We're still getting up there, though. We're getting good numbers, and even though we don't have to trade that much, look at in here. This is important in here. It has not taken me 20 minutes yet this month to get the goal for the day. Today was pretty close because I made a stupid mistake on the ES right at the beginning. But we got it back shortly after, and it only took 4 trades, which isn't bad. Anyway, if you're doing the 24/20 blueprint and you are adding 1 contract per month, let me just check who's in here. If you're adding 1 contract per month, so far this year, you're at your 7th contract now and averaging $1,530 per contract. I'm not per contract, sorry, $1,530 per hour. If you started with me in January of last year, you are now in your 19th contract and you're averaging $6,568 per hour. Okay. We're going to be at 20 contracts in a couple of weeks, guys. This has to get up to 38,000 for me to turn to 20 contracts, and we still have 9 business days left. So we're, we're about, I don't know, 5/8 of the way through the month right now. And so that means we still have 3/8 of the month left, which is plenty of time to get that up. Given what we've done so far, we're averaging $1,900 a day, a minimum of $1,900 a day, $2,000 a day. So if we do get the minimum $2,000 a day for the other 9 business days that we have, I'm pretty sure we do have 9 complete business days, right? No more holidays in July, so 5, 6, 7, 8, 9 complete business days. Let's get out my handy dandy calculator that I had to reboot again yesterday. So I seem to have lost it, but we'll bring it up. And we'll do 9 times the minimum of $1,900 to get the goal for the day is $17,100 between now and the end of the month. That's the minimum getting the goal. And add on to that, the 32,252 that we already have will be at 49,352 minimum by the end of the month is what this number will be. I would bet it's going to be over 50,000 by the end of the month. And that's all we need to add on another contract. 38 is all we need to add on another contract. All right, so good stuff. Just consistently getting your goal and compounding it month after month after month after month. All right, compound interest, wasn't it? Was it said compound interest? Did I say? I think so. He also said insanity. A lot of other things too. Anyway, let's get into the actual trading. Okay. Again, today and tomorrow, we're just taking ribbon trades in here. We're just looking for the ribbon trades. All right, on the Russell and on the ES. So doing that today on the Russell and on the ES. On the Russell, we're up 33 ticks, and on the ES, we're up. Well, we're actually minus 8 ticks on the ES, but I missed some good trades. And one trade that I took that we stopped out on, it was a mistake. I shouldn't have done that. That was our very first trade of the day. I shouldn't have done that. All right, so let's get into it. We will get into it. It's 10:57, so we're almost into the YouTube part 2. Did I go through all the markets? Did I not? I don't think I did. Okay, let's go through the markets. Okay, on the YM, we had just one trade. Sorry, I totally skipped over all that. On the YM, we had just one trade, and it was a break. No, it was a +7, and I don't know where it was. It was +7 on the YM, and I don't know where it was. It was in here somewhere. We had one +7 tick trade on the YM. You can see there were a lot of trades there. There was a lot of opportunity on the YM. I was able to get 7 ticks out of it anyway. And during the break, I don't know if you noticed, it was just a nice blue arrow trade right there. A few minutes ago, a few minutes back here. Right there, beautiful blue arrow trade right there. The Russell, we had a few trades here on the Russell, and let's get into those. Scroll all the way back here. There were a couple right there at the very end. Why do I have a red arrow on that? I'm pretty sure I'm not supposed to have a red arrow on that. Let's go back here, and here, and here. All right, got all these blue arrows. Now I ended up missing a bunch of these, but I got this first one right here. Yeah, right here. I got this first one right here. Our first one on the Russell was 11 ticks. Then our next one on the Russell, there's some really nice blue arrows in there that I ended up missing. I got this blue arrow right here that got 10 ticks, put me up to 21. Then I got another one right here that was 12 ticks to put me up to 33. And then I did nothing for a long time, it looks like. Then I had 2 trades in here that I did not write down. I had one here and one here. I'm not sure what they were, but I didn't write either one of those down. So this looks like it was a good 10+ tick trade, and this, if it was a red one, which it may have been, but I don't know, it would have been a -10 tick trade. So that probably equaled out, or actually would have been more in favor of the positive side. but I missed it. Anyway, blue arrows, there was one there, purple arrow, one there, blue arrow there, blue arrow here. Now the trend trades, the ribbon trades is all we were looking to take. So there are going to be times where you have trades off the ribbon where you have no arrows, right? That's when it comes back and hits the ribbon and it closes off the ribbon where the outer band is the wrong color, right? There will be trades like that. This was a blue arrow from right in here that needed to put in a higher swing. Blue arrow there that did put in a higher swing. All right, I was looking for one of those trades that I was just telling you about. I'll find one. Here's one right here. All right, where it came back and it hit the ribbon right there and it dropped out. But I don't know why there's not a purple arrow on this. It seems like there should have been a purple arrow on this one, but that's a trade right there. This one right here also. And if we go back and look some more, you know, the purple arrow, the slingshot's got to go in the right direction for the purple arrow to happen. Like this one right here was the same type of trade, but the slingshot was not going up. It has to be going up. Like this one right here, if the outer band were the right color, you'd have a purple arrow on that. But that right there is one where the outer band was not the right color when it hit the ribbon. So that's a valid ribbon trade right there. It's just not going to give you any kind of an arrow because it's not going out of the upper bar. Okay, so those are the kinds of trades that I was trying to illustrate this week on the Russell and on the ES. All right, in the ES again, remember it's on a 4-tick range. That was another thing that I messed up this morning with that first trade. I had my order in the complete wrong place because I was treating like it was a 7 range. And it took me a few minutes to figure that out. So on the Russell, back here to the very beginning. Now this is not the Russell, this is the ES. All right, this is the first trade that I took. And I treated this like it was a 7-tick range, so I had my order down here. My buy stop limit was down here. My sell stop limit was down there, sorry. And it actually failed me on that, and then it came back up and it stopped me out because I had an 8-tick stop on a 4-tick range, so I had my stop in the right place. It's just my entry was wrong. Anyway, big mistake on my part, and I paid for it. It did end up going down some. It wasn't a valid trade in any way for what we were trying to do because they hit the black line too. Right, so I totally messed that one up and ended up stopping out. We didn't do another trade in there for a while, but we did have a nice blue arrow right here that ended up working out, but did not put in a higher swing. Looking for just trades off the ribbon. The next one was this blue arrow here that did not work out at all. Now just more trades off the ribbon. This blue arrow here was perfect. And blue arrow here was good. Purple arrows in there, good. This pulled back too deep. It hit the black line in the ribbon. This hit the black line. This one did not hit the black line. This did, but this didn't. That's why you got a blue arrow there. Right, nice one right there. This right here, you could have traded this off the ribbon right here because it wasn't coming off the black line. All right, so you could have traded that off the ribbon right there if you wanted to. And this one right here too, you could have traded that off the ribbon. It would have given you a purple arrow if the slingshot were going up right here. It would have given you a purple arrow right there. Okay, so just talking about the ribbon trades, it was this one here. That was off the ribbon, that was off the ribbon. All the purple and blue arrows were off the ribbon. And you can see they were doing quite well today. All right. So we ended up on the Russell, we ended up with 33 ticks. Okay, and the NQ is next. On the NQ, we had a whole bunch of trades. So let me get into the NQ part. Right, that was the ES, sorry. On the ES, we ended up with -8 ticks. Let's go here. I keep mixing this up. I was doing this yesterday too. Alt and back. We're gonna have arrows in here. Now we traded a little bit today on the 31 range on the NQ. One of the guys in the room this morning had asked, what if we go to a larger time frame? And I did that for a couple of trades just so you could see it and experience it. And they were all winning trades. I think I had 2 break-even trades in there, 2, maybe 3 break-even trades, but the rest of them were all winning trades that I took on that. We happen to be getting in at that point, right, in a great trend. All right, so this is all pre-market here. Right, and the markets opened up. We had a break-even on our first trade right here. All right, the next trade right after that was here. We picked up 30 ticks. And right after that, we stopped out. Put us down to 10, then we got 30, got us back to 40. Then we got another 30 that got us to 70. Then we stopped out again, got us back down to 50. Then we got another 30 right there that got us up to 80. A couple of break-even trades right in a row. And then these purple arrow ones right here were trades that I took on the 31 range. All right, we picked up a 30-tick trade there that got us to 110. Another 30-tick trade that got us up to 140. Now, they don't look like trades at all right here. What these lines are illustrating is where the swing highs and lows were on the 31 range. So let me just go out there and I'll show you what that looked like when we were doing it this morning. Okay. Let's bring it back here so we can get to those purple arrows. Yeah, right here on the 31 range. We had a bounce off the ribbon right here is what we're looking for, right? And we took that off the 31 range. And at the time, the prior swing high there was right here. Okay. And then the next one was a blue arrow right here. We took off the ribbon. And the prior swing high there was right there. All right. This is what it looks like on the 31 range. Okay. Now I thought we took a break even trade in there somewhere too. But we did this on the 31 range. Now, if you take it back down to the 15 range, we're looking at 9:57, 10 o'clock. If you kick it back down here to the 15 range, and we scroll back there to that time, do this, scroll back there to that time. Hang on. There it was right there. Okay, the swing highs and the swing lows. The swing highs are still going to be in the same place. It's just on a smaller time frame like this. It was 9:57, 10 o'clock. On a smaller time frame like this, it's there, 9:57, 10 o'clock. We're getting there. All right, on a smaller time frame like this, when we have the window minimized and we're looking in here at 9:57, 10 o'clock, all we see at this point is like right over here, and this is our swing high. All right, when you get into a trade, like we would have gotten into this green arrow right here, for instance. We would have been looking, well, go all the way over here. You know, when we took this one, there was a reason on the 31 range to take the trade down here. But as we got in here, we would have taken this blue arrow right here, and the swing high would have been right back here, or maybe right back here would have been our swing high that we're looking at, because that's all we can see. But in reality, on a bigger time frame, you can see it was a little bit higher on a larger time frame, right? But the swing high is still there. And so on a smaller time frame, if we would have taken this, it probably would have been a break even, and we wouldn't have taken this green arrow. We would have taken this green arrow and it would have stopped this out pretty much to the tick, and then we would have gotten in, and we wouldn't have gotten in anything after that. But on the larger time frame, this was a pull back down to the ribbon where we bounced off the ribbon, and we're looking at the prior swing high being right there, which you cut to. And the next one was over here. This was the blue arrow on the larger time frame, if you remember. It was the blue arrow on the larger time frame, and it pulled back and it hit the ribbon again, and we took that on the larger time frame, and this is where we expected it to get to, because that was the prior swing high, and it did eventually get up there, just a few minutes later. That was all from the morning session. Let me look in here. I don't have any questions about any of that stuff, so I guess you guys are all good with that this morning. Let's pull this up and I'll get through the rest of it here. I haven't finished going through my trades yet. Let's see. We only had one more trade and we got a 30-tick gain on it. I don't know where it was, but we went into the lesson plan, and here there were some really nice trades on the way down. A lot of black arrow trades, purple arrow right there, a couple of greens, and we still haven't even gotten to the break yet. What I want to see, I told everybody this morning what I thought was going to happen with options and with price, and I don't know where is the current price right now. Are we there at 19,930? Well, let me look over here. We're at 19,864. Okay, so it did keep going down. Well, somewhere in here we took another 30-tick trade on the NQ, and that got us up to 170. Right. So during the break, this is all during the break now. During the break, we had a couple of blue arrows there, would have given a break even. Blue arrow here would have been great. Blue arrow there would have been a break even for me. Blue arrow here would have been great. Blue arrow here would have been a break even for me. See, break even means it goes 8 ticks into profit. All right, that one would have stopped me out. That one would have stopped me out. We've gotten it back right there. And that would have been either a break even or a stop out, but I had no reason to be trading after getting all those good trades. There's no reason to keep trading, but there's a couple more nice good arrows right there, good blue ones, another one right there, and that would have been break even, wrapping it up. Anyway, that's how we ended the morning session. So let me go to the spreadsheet really quick. Okay, let me close this spreadsheet. We'll go to this one. Today is the 18th day of July, 2024. We made 176 on the NQ, 33 ticks on the Russell, 7 ticks on the YM, and we lost 8 ticks on the ES. That put us at plus 950 on the morning session. Today it took 16 minutes and 4 trades to get to the goal for the day. At that point, we're up $1,900, and we took a total of 15 trades. So on the month, we're at $6,027. That's over 13 trading days, averaging $463 per contract per 2-hour trading day. On the year now, we're at $53,112. It's over 133 days, averaging $399 per contract per 2-hour morning session. Now, if we hit the goal for the day, the minimum of the goal for the day going on out in a month, we needed to get to, with 7 contracts, we need this to get to 14,000 by the end of the month, right? 14,000 by the end of the month. And the same math that I did to get up to that 49,000 number with the with the 19 contracts that we're on, the same math works here. $700 a day is getting the goal, right? So 700 times 9 is 6,300 minimum that we're going to add to that number by the end of the month. All we need to get up to is 14,000, but it looks like we'll get up to a minimum of 6,300 plus 782. We'll get up to a minimum of 18,000 by the end of the month, right? That's assuming we get the goal for the day every day. We'll get up to that number by the end of the month. Now, the average hourly rate, this number goes up a lot quicker when this number is smaller right here. All right. If this number stays at 19 and this number stays small, then these numbers are going to go up faster. If this number stays small and this number goes above 19, then those numbers go up dramatically. But this is what it is. This is where we are on the month. All right. And on the year and all that stuff. Now let's get in there and see if we can throw a couple of trades on and wrap up this whole session right now. I feel like I've been going nonstop for days. All right. Looking here. What was it? That was the Russell. Interesting. All right, so on the NQ, we want this to pull back down and test the ribbon. On the ES, we want that to pull back down and test the ribbon. On the Russell, we are going through the ribbon. And on the YM, we want it to bounce off the ribbon here, but the outer bands are pretty flat right here, so we don't think we're going to get anything around YM. Okay. For all you guys who were not in there this morning, I want to also let you know that StoneX is in the middle of consolidating all of their introducing brokers white label software. All right, so what that means for you guys that are out there who are using things like Xena 360, Gann Capital, Global Zen Trader, any of a number of the other ones that are out there, the OEC Trader, Gain Trader, all those things, we can consolidate them all and stick them into one place that looks like this. Okay, we put our indicators out there last night in the indicator store. We're the only ones actually in the indicator store out there. This is StoneX. You see the X up here. Here, I'll bring up a DOM too. All right, this is what it looks like. StoneX Trader Demo. This is what their StoneX Trader Demo looks like, and this is what the DOM looks like. Okay, it's got the X up here in the corner, and it'll probably say a whole bunch of other stuff in there too. Like I go in here and I hit, well, if I right click on that, hit configure, this and this, and go down here and hit that restore default. I don't know. It'll stick your account number up there too. I managed to find a way so it doesn't stick my account number up there anymore. But this is what it looks like. Okay, and what you'll have to do is go out to the indicator store, right click, go to indicators, and go out to the indicator store. And the store looks like this. We are now the only ones in the store. You have to put the CFRN indicator set in there. You have to just do that, right click on it, hit install, restart StoneX Trader. I guess that's what they're calling it. And restart it, and you'll have all your stuff working. All right, now this is an account that they gave to me to set things up. So you see you have all the indicators in here. And in here, if you go to indicators, they'll all be in here just like they are normally. All these indicators are in here just like they normally are. And I checked them all out last night, and they're all functional. Everything's good in there. Okay. All right. So the ES just had a blue arrow long right there that went, well, it went 4 ticks into profit, at least 4 ticks into profit to get your stop to break even. The DOM is suggesting it's going to get up to 1150. 1150 is where the DOM is saying it's going to go to, and that happens to be right up there at the swing high. So that's perfect. The NQ, meanwhile, is giving a shorting opportunity over here, and something is up with my NQ DOM. I totally messed that up. Okay, that's better. Something was totally wrong with my NQ down there for a second. I had a trade that I had on there that I did not realize I had on. And as I was trying to put another one on, it wasn't working out for me. But the ES right now, we had blue arrow long, and I just bumped my stop to plus 1 tick. This is the number right there, 1275. There was a number right here at 12 that I was looking at a minute ago, but now I'm looking at 1275. And I'll highlight that number for you, because though it just took me out with a little bit of profit, it's going to be going up here to 1275. All right, that's where it's going to go up to. And that was part of today's lesson plan, reading the DOM. Okay, so Dwayne, it is just me and you in here. Valerie's not in here. I guess she doesn't do afternoon sessions anymore.
Yeah, I'm right here. Did you need me?
Okay, no, I needed her.
Oh.
I needed her. But I'll put it out in the boardroom.
As I was getting ready for the broadcast, I saw that flurry of message from you, but I haven't had a chance to read them yet.
Okay, well, it's about that.
Yeah, I know what it was, but I just haven't had a chance to get on it.
No, I know. Well, that's okay. You can get on that whenever you can. Okay. I just want to give you some information.
No, yeah, I appreciate it very much.
But more information toward that end. To create some reels, the 15-second reels that they seem to be running on different things, different platforms.
If you got some, that'd be great.
I don't, but that's where Valerie, what I was going to just tell her comes in. I created like an hour-long video during the break that will have all of these trades that trigger during the break on the ES, all these blue arrow trades that trigger during the break on the ES. And she can go and run that and make a reel out of it while it's running. And make a 15-second of it while it's running.
I have it. If she's busy, I have video editing software. It's a piece of cake.
Okay.
You could do it with OBS if you wanted. But
yeah, that's what I was suggesting. You could do it with OBS. That's what I'll give you the file that I created with OBS, and you can go back in.
Okay.
And pick it out.
All right.
Okay. There'll be just with the ES. There's some in there. I know all the markets had trades during the break, so you'll be able to go and pick things out of that. Little 15-second trades.
Okay.
You can go back and look at the actual charts and see where those things were in the video, so you won't have to watch through the whole video to find it either.
Right.
And see exactly what the time was.
Okay.
Right. So that said, we took a little bit of profit on this one right here. It did go up, and that number that I gave you right there, the 12 number that was in the DOM, we just hit that number, right? So now the next number up in the DOM is 13. It's 13 on the upside. Now we can bump that other one up, but we can just drop this one down here. 13 is the next number up in the DOM, so it's going to try to get up to that number right now. Now the thing about this reading the DOM business is it's good for managing the trade. There's no reason to enter a trade, but it's good for managing a trade. So if you get into a trade, like right now, 1450 is the next one up. 1450 is the next one up. And it's good for managing a trade. It's not good for getting into a trade. You got to have a good reason to get into the trade. Like right here, we had, back here we had a ribbon trade. I have a horrible entry on this, and I probably shouldn't have done this, but I want to do it as an example because 1450 is the number it's trying to get up to right there. Okay, and we should get up there right now. It should make its way up there. We just hit the 13 number, right? Did we hit the 13? Just about. Once we get through that 13 number, 1450 will be coming right up. Okay, and there's the 13. Okay, so the 1450 should happen pretty quickly here, I would think. I should have had my stop and break even on them. I was going to drop it there or break even, but I didn't. So we actually have another bounce off the ribbon right here. If we get an up close on this bar right here, the current bar that we're in, it would actually be another trigger. It's not going to give you any kind of an arrow, but there it is, another trigger, and it's not going to give you any kind of an arrow. Again, I should have my stop and break even, and my entry is off by half a point. But it's going to make that last push up here, I think. That's why I'm hesitant to drop my stop and break even, because I don't want to miss out on the opportunity. But I'm going to drop it right now because we have a trade coming up over here on the NQ that's probably going to work a lot faster than that one. And so I ended up getting out of this at break even. About 1450 is the number it's going up to. 1450 is the number it's going up to. And the NQ trade just gave me 30 ticks in profit. That's what I was talking about. The NQ trade just gave me the 30 ticks in profit. And we just got through the 13, and 1450 was the number I said it was going to go up to, right? 1450. And did it just get up there? Why is this not reflecting what I think it should be reflecting? All right, so 1450 is where I tried to put that. 1425, 1450. All right, so I got the 30 ticks in profit on that one. And we're just about to get it over here. I ended up with a break even on that. But I missed the Russell trade over here. Now, this is the kind of trade that I wouldn't want to take, the purple arrow trade, because the ribbon is still crunched up pretty good right there. All right, it's starting to spread out, but it's still crunched up pretty good. Now, right here, if we were to have a purple arrow on this, which we're not going to, well, we might. The outer band is still red, so we could get a purple arrow there. We didn't because the slingshot's not pointing in the right direction, but that is a valid ribbon trade right there. Okay, that's a valid ribbon trade right there. So I'm trying to fill, and I just filled. Okay, I just filled right there. That's a valid ribbon trade, which is what I've been trying to show here on the ES and on the Russell, is that to place all the trades, to be successful trading with this stuff, you don't need to have everything on there. The minimum stuff that you need is right here. You need the slingshot, you need the outer band, and you need the ribbon. That's what you need. Okay. I know sometimes there's a lot of things on the charts and it looks like it's all cluttered up. You don't need that. I'm going to stop out on the Russell, but that's okay. That was a good valid trade, and it was a good valid stop out. So, what time is it? 1:23. Okay. I was just thinking of the things I got to do when I'm done with this, all the things I got to do. And one of those I cannot do. But I was just thinking I was going to get right on it. But it is not possible. Oh man. All right, I'm just gonna move that off to the side. Nice green arrow over there on the NQ. Green arrow long trade there. Now the entry should have been right here at 37.75. Mine was at 38.50, but after 8 ticks in profit like that, stop goes to break even, and now we'll lock in 1 point. Get rid of the original stop. That is killing me. Those of you guys who use the strategies on DT Pro, I was talking to Chris from Gain or from StoneX, and he said that they're going to have that strategy stuff fixed. So it's working again pretty soon. The ES is going to trade right here again. The ES is going to trade. Okay. And there, we'll jump on this one on the pullback. And this has got numbers right up there is where that is going to this time. Okay, I'm going to throw my stop at break even. I got a better entry this time. Did we get up to my 14 number? We did, right? 1450 is not what it was. 1450 is what I said, right? The next one is up at 1550 right now, and that's the swing high. That's where it's going to try to get to next, is this swing high 1550. It looks like it's pulling back right here, so I was lucky to get out with the break even on that. But this is where it's trying to get up to next. Now that we didn't get up there, see, we were waiting up there for a target. Now that we didn't get up there, look down right now for targets. Okay, look down for targets. There's one right there, 5607. 5607. Now, as you look down for targets, you can mark them. Take this and mark 5607. 5607. Now look here on the pullback side and see if we get something here. All right, like right up here, 1175. That's gonna be right up here, 1175. Is there any reason for it to stop there? Well, yeah, it's right at the BBC. That'd be perfect if it gets up there to 1175 and then pushes down. We're not gonna have a trade set up unless it does that. So that's reading the DOM. Okay, that's reading the DOM. Seeing what the DOM is giving you as far as information, and see if it relates to anything that's on your chart. Right? If it's finding areas of support and resistance that you know about already, that you know should find, like right here on the pullback up, there should be an area of support and resistance when it gets up to the ribbon. Now it's 1175 is what it's looking like. So it looks like it should go through the ribbon a little bit right here. This is what it's looking like. Now this is going to be a valid ribbon trade here. If we get the down close on this bar, that's a valid ribbon trade. Oh, yep, and Q short, you're right over there too. I missed it. No, it was okay. It was a good short. I just grabbed it. Sorry. I put it on, and I shouldn't have put it on because it was too late. It had already gone 8 ticks into profit, but I left it on, and it just failed me, and it stopped me out. But it had already gone 8 ticks into profit. Now I'm looking for the ES to give us a down close. There's a down close on the ES. Now this is not a valid ribbon trade because they hit the black line. This would be a green arrow trade right here. If I had the green arrows on, you'd have a green arrow on this right here. Okay, and what this should do is push all the way down here. But we're only doing ribbon trades, not green arrow trades. We're doing blue arrows, purple arrows, and no arrows off a ribbon. That should push right down to here. The number that was in the DOM, managing the trade based upon the number that was in the DOM, you'd be moving your stop to break even the same way you always would on the green arrow trade from here. You'd move your stop to break even the same way you always would, but you'd be looking beyond the swing level for a target. You'd be looking down here for the target because that's what's in the DOM. You can't see it now. And, in the bigger picture, this was probably just a pullback, a bigger uptrend. You see how it is right here. I think I went over this a little bit yesterday, but it's probably just a pullback, a bigger uptrend. The trend was up. Here's your pullback. The trend is up. Here's your pullback. That's what it should do, right? More up right here. So this number up here that came into play a few minutes ago right here is still in play. If everything switches around right now, it gives you a long opportunity. That number is going to be right there again. Okay. Just flowing with the market. The market's saying we're going up. We got a little bit of a pullback here in the bigger picture. It may give you one short trade. It did give you, if you had the green arrows on right here, it would give you a green arrow right there. And it went enough into profit to get the stop to break even. I think if you got a good entry on it, okay, well, it's giving you even a better one here. But if you got a good entry on this, 975, it dropped down to actually 925. It didn't give you enough to get the stop to break even. It would have just stopped you up. The green arrow. Now, if I put the arrows on, you'll see that there is a green arrow right there. Go in here. There will be a green arrow right there. This one. There it is. The green arrow. I don't know why I have that one in there, but anyway. So just going with the flow. It's going sideways here right now. You're in a little bit of a range. And what happened right here was a 50% pullback right there. When you get these big legs down like that, that kind of messes up the ribbon, depending how fast it pulls back. Okay, because it takes the ribbon a little while to catch up. And so now it's stuck in chop. So you wouldn't be doing anything here right now. All right, time's at It's 1:30. It is time. All right, so if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple arrow right here. There's no credit card required for the trial. Click on the purple arrow. Now, anybody that's watching this after the fact, or anybody that's watching this on YouTube right now, the morning session, half of the morning session is training, where it's not doing this fast trading and jumping around like this. I do that every morning just to get the goal every day in the spreadsheet. Right, we get the goal every day for me too, but to get the goal every day. I start out quickly, depending on what the markets are doing. I get in there and get it done as quick as I can. I'm going to keep doing it quickly until the markets slow down, or until we get to like 10:15 Eastern time. Then the discipline begins, and then everything slows down. And depending on the questions asked or the rabbit holes I get lost in, it may end at 11, it may end at 11:30. That's it. If you have not taken a free trial with us, again, go here to mytradingiq.com, click on the purple button. No credit cards required for the trial. Pass back out to fabulous Phoenix, Arizona.
If you do that today, we will get you set up today, your desktop, get your indicators indicating, and your trial will start tomorrow, Friday, but Saturday and Sunday won't count against you, and you'll still get Monday through Thursday of next week. So you get 5 consecutive trading days no matter when you sign up.
Yes.
And some markets trade over the weekend, so probably should just start calling it a 7-day free trial, but anyway.
That's how it is in the indicator store.
Yeah. All right. Let me grab this and
partners meeting tonight. It's Thursday.
That's right, guys. Yeah, I reminded them at the top of the show, but it doesn't hurt to remind again. And guys, we'll do our best to start on time, and please have your questions ready. Okay?
Yes.
And if you've been on the trial, okay, and you want to be in the members only workshop tonight, you've still got plenty of time to answer the email Michael sent you. Call us at 949-42-EMINI. Email us support@cfrn.net. Just say, hey, I want to be a partner. What I got to do? Send you a link. You click it. Bang, bing, you're in. Bada boom, bada bing. Recap of the morning session.
Today it took 16 minutes and 4 trades to get to $1,900.
That's a terrific Thursday.
It is. Another good day. All right.
Okay, guys, we're going to pick up here on the daily chart. Typically, by the time Michael comes on, I've already gotten through the daily chart, and I've started to get into the 30-minute charts where the alerts are created. But I was rolling a little slow today, and I had a lot of news to share with you. But the thing we talked about early this morning that I talked about in the live training room while Michael was on break, and I posted many charts in the discussion group and Telegram. I said, it looks like, guys, price is going to, because yesterday we closed below the 50% fib extension. Last night we opened below the 50% fib extension. And while we did spike it up to the step line, which the step line, the black line, is directly above price, we expect that to be resistance till proven otherwise. And it was. It sent us down to the 38% fib extension, and then all the way down to the daily BBC. I've already explained, BBC is the green line on all my charts, stands for bull bear cross. When price crosses below it, we're bearish, anticipating lower prices. When price crosses above it, we're bullish, anticipating higher prices. What you may notice is that whether price pulls up from below, pulls down from above, the pullback holds more often than it doesn't. Now, right here is the 24% fib retracement. Over here, these are extensions. These are retracements. Same 14th century math applied a little bit differently. I did say this morning that I thought, now normally the pullback holds, it might spike it, but then we get a nice bounce off of it. I got a feeling that maybe we don't get the bounce we normally get. You see, we know eventually price will trade through the BBC like it did here. And it went on to do this, and retrace, and do this, and retrace, and do this. Over here, price pulled up to the BBC, and it went down to do this, and it pulled up to do this. Problem here is it ran into blue and climbing, which is support, and that walked it back above the BBC. So what I'm really interested in is how we close today and how we open tonight. Now, the reason we're even looking at the daily chart, institutional traders, ones with huge account sizes, the ones that trade in such incredible size that they literally move price, they look, because of their account size, they look at daily, weekly, and monthly charts. Well, you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it all has to do with account size. So no matter what you trade, whether it's futures, stocks, crypto, Forex, ETFs, if you'll train yourself, trust me on this, if you'll just train yourself to spend 2 minutes with the daily chart, wherever you're getting ready to trade, before you drop to your smaller time frames to start trading, if you just spend 2 minutes with the daily chart and look over the shoulder of the institutional traders to see what they're doing, if they're doing anything, then all you got to do is do what they're doing long enough to get your goal for the day. I know that sounds like shooting fish in a barrel. It's not as easy as it sounds, but I honestly believe if it will become part of your daily routine, okay, I trade whatever, but I first look at the daily chart and say, especially with now, it's a little different with stocks, but with futures trade around the clock. So when you open your daily chart, you see this candle opened last night at 6 p.m. Eastern. So you know where resistance is at the high of the day. You know where support is at the low of the day. But you also know at what price the daily BBC's at, 5,600. You know what price the step line's at. You know these extension numbers. You know these retracement numbers. And that's information you carry with you on your notepad or in your head into your smaller time frame trading. Okay? I'll just leave it at that. All right. The 30-minute chart, again, is where all alerts are created. These lines, these weekly trading zones, are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price drops to a weekly trading zone, we expect support till proven otherwise. When price rallies up to a weekly trading zone, expect resistance till proven otherwise. As long as price is above the BBC on the 30-minute chart, I will only issue long alerts. You heard me say there's over 17,200 individual handcrafted alerts in the Logic 247 channel. And what we've averaged over 311 weeks is 20% or less of the alerts being stopped out based on market structure. A very simple process that I teach all of our passport holders. This week we're sitting at 9%. But as I said earlier, we still got a day and a half, so I could probably screw it up between now and then. End of the week. Notice how we hit the zone and we consolidated. You should expect that 70% of the time. 20% of the time, you're going to get rejection. 10% of the time, you're going to get the slice. So we opened last night, right here. 15 minutes into the life of this candle. All of our members and all of our trial members got all of these targets. Okay. 6:15. I've already explained what you do when this report comes out. If you missed it, you can always rewatch today's broadcast on YouTube. It's streaming live there now, but we archive it so you can watch it later. All right, so price hit the BBC. It acted as a resistance. It dropped enough to get your goal for the day, but that's not my point. My point is buyers came in and drove us up. Kind of an unusual spot. You see, we knew that this would be potential resistance right here. And so did they. And so they didn't push it. They let it drop. It takes financial commitment for price to rise. For price to fall, all that it takes is for the institutional buyers to lose their confidence. And this happens. And then this happens. See, they tried again. They tried again. And finally, they just backed off and said, man, I'm going to get fired if I keep losing company money. Then this happens. All right, so we come in, we nibble. They nibble. They've pushed us up to red and falling, which is potential resistance. Now the step line has hooked to the right. You notice on the way down, you had what I call the perfect stack. Price, step line, red and falling, BBC. Okay? Until that picture changes, there's really no reason to get out of the trade. When this step line hooked, you'd have still had a majority of your profit. Wouldn't have had all of it. Nobody gets out at the swing high or swing low except by accident. I mean, that's just the truth. And anybody that tells you anything different, keep your hand on your wallet. Now, we've hit resistance at red and falling. So what am I expecting from here? A push down to the step line. Then one of two things is going to happen. It's going to straighten that step line out, and price is going to continue to fall to this low, and then to the zone. The other scenario, price drops to the step line, buyers come in, and they push us back up to the zone or the BBC, which would be resistance times 2, and then we would look for another leg to the downside. Okay? See how it's falling? It's not because I have crystal balls. It's because I have learned over the years how to read a chart. I understand price action, how price flows. And when you become a member, I'm going to teach you everything I know. Now, what you do with that knowledge, I have no control over. You can laugh at it. You can, but as long as I know that you're actually trying to follow it, I'm going to stick with you like white on rice. I'm going to help you every possible way I can. Why? It's what I do. Am I always going to be right? No. Hopefully I'll be right more times than wrong. Logic 247 says I'm wrong about 20% of the time, or less. So, it's up to you. Anyway, we can't linger here forever, so let's move on. Now, in order to truly trade to the long target, we would have needed to overcome this zone at 73.74, which means maybe you trade 76 to 79, okay? But It really wasn't. Now, let's say this candle had come up and taken out this high and taken out this high. Then would I have traded, say, 69 to 73? Oh, yeah. Because there's nothing in the way. Now, what do we got? Here's where we opened last night. I tried to get up to that target, but it couldn't quite do it. And there's a reason. Blue and climbing was directly above price. See, when you've got the parallel like this, then it's your friend. But once it gets on top of price, it has a tendency to contain price because it's often on its way to becoming red and falling, which is the opposite of blue and climbing. This is bullish, this is bearish. Okay? So, once this thing turned to red and falling, I'm just waiting for price to get below the BBC. So we get a leg. Now remember, price rarely travels on a straight line. These are 30-minute candles. So we had a leg and a retracement and a leg and a retracement. And then we had a leg that took us all the way down to the target, to the tick. Now, if you look at the horizontal line on my cursor, you'll see where that target came from. Support will always send the market looking for resistance. The market finds resistance, it's going to go look for support. And where did this support come from? The idea? Okay, so we're consolidating sideways. Should the step line cross red and falling, then we definitely expect to pull back to the BC. We may just consolidate sideways and continue dropping. Okay. Would I do anything at all right now? No, except this. Price were to start dropping at 41,170, I would short it down to 41,150 and get my goal for the day. Right there. Let's say buyers come in and just go absolutely bonkers and start buying the market. You can plan your work ahead of time. Put your feet up on the desk, read a paper, listen to a podcast, listen to some great worship music. Because there's nothing for you to do until price gets to the opportunity. Prospectors don't go out and just chip away at the desert, hoping they're going to strike a gold vein. They do some testing. They have their methods. I don't understand them all. But they know where it's highly likely that they're going to find gold based on certain tests that they run, soil samples, and I think they got some kind of fancy sonar and whatnot. They're only going to chip away in that area where it's highly likely they're going to find gold. I mean, if you've ever driven through the Arizona desert, it's a big place. You could spend eternity out there with a pickaxe and find nothing. Except a little town called Nowhere, Arizona. It's got one gas station. No stoplight. It's a real place. Okay. Looks like price wants to pull up to red and falling. Okay. That could be the resistance that sends it back down. If we get above red and falling, then we're probably headed to the BVC. Price always reverts to the mean eventually. Okay. But right now, if I'm going to trade the Dow, somebody put a gun to my head and said, dude, You only trade it down. I would either trade it here or I would trade it here. I have no interest in any of this mess in between. And should you become a member, I will teach you to see the market with that kind of clarity. Russell. Here's where the market opened. 15 minutes into this candle, the CTAs came out. And we ran right up to the target and the zone. And the zone is where we expect resistance. Resistance sends us back to support at the BBC. It sends us back to resistance at the zone. Now remember, these zones were published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. This zone right here on the Russell, this is the highest weekly zone for the week, 2273/74. So did I get worried yesterday? No. Because over the almost 15 years, what we've learned is even if price runs above the highest zone or below the lowest zone, the highest probability is that by close of business on Friday, it's going to be back at that highest zone or below. And here it is Thursday, and you see where we are. Okay. All right. So from resistance, we ran to support. Where'd the support come from? This is Wednesday. This is Tuesday. We drop a little bit more. And you see the low of that candle right there? Back on Tuesday. Spiked it. We stopped right there. Now that's not where we would expect to find resistance. So what's happened? Buyers have come in. The ones that have kept getting slapped down all day. And they're setting themselves up to get slapped down again. Now where would you actually expect support? I'm sorry. Here. So am I saying that I would trade 2231 down to 2229 and get my goal for the day? That's just how I roll. Now, my way of doing things is not the only way of doing things, but it's all I got. So I can't teach you what I don't know. And if you try to learn everything there is to know about markets, from the trend to the tricks to the Bollinger Bands and the RSIs, and if you want to spend years trying to learn all that stuff, I mean, it's your right. But you don't have to. And I'm not knocking those things. Because I know people are listening that use Bollinger Bands all day and use the RSI all day. You couldn't trade without them. And that's okay. I'm not saying they don't work. I'm not saying they don't do exactly what they were created to do. I'm just saying that with our style of trading, we don't need them. We don't use them. Okay? We try to keep it as simple as possible. So we got to break this low, and I want price to prove itself. That's why I want it to get all the way down to 2231. See, it's sitting at 3320 right now, but I want to see it go all the way down to 3331, and then I'll take it down to the next reasonable area for support. It may keep going. That's fine. As long as I get my goal for the day, that's all that matters. That's all that matters. Next zone's way down here. So there's lots of spots on the way down for the market to find support. And if you're not making yourself aware of those spots, if you're getting tunnel vision just looking at a range chart and you're kind of not doing so good, learn to read. Well, you got to learn to read the charts, period. 30-minute will serve as a good roadmap. And when you find the opportunity on the 30-minute, then you can drop to your range chart and actually execute the trade and minimize the risk. All right, so we just hit that 31. Now, do I know that it's going to continue to fall to 29? How could I? All I know is it's the most logical thing that could happen. It would be highly illogical, as Spock said, if it were to just suddenly flip around and run the other way. Okay, where's 29? No, not quite, not yet. Yeah, that's as close to 29 as I can get it. No magic, no crystal balls, just understanding how price flows. That's what we teach you. I know other people teach you really fancy stuff and they got algorithms and there it is. Everybody agree? Okay. Am I trying to show off? No. It's the last thing I want to do. God loves a humble man. A proud man, God will humble. Okay? So, I'm not trying to impress you. Well, no, I take that back. I'm trying to impress upon you that you can do this. Okay? Now, did I have the trend? Did I have the tricks? Did I know what the advanced decline line was? No. I just know how price behaves. And you can learn it too. And it's not as hard as you might think. In fact, it's probably simpler than you think. You don't need to know everything in the world there is to know about markets. You simply need to know enough to get your goal for the day. And that one thing you learn, just show up and do it every day. After day, after day, after day. So what's our low so far? 28.7. So we went 3 ticks over the target. Okay. NQ. Here's where we open. We bounced up to the BBC. We actually pushed through the BBC and quickly reversed. See, when you see this kind of movement, buyers throw in the towel. And they try again and throw in the towel. Then they try again. You see this double top? And this is when they not only throw in the towel, but they get up and walk away from the desk. And the institutional firms that specialize in short selling, they recognize that. And they just power this puppy down. This candle opened at 19,990. and it dropped, we'll call it 820. It dropped a little further. Now that's 80, this one candle right here is 80 points at $20 a point. That's $1,600 per contract traded. Imagine if you follow the 2420 blueprint and actually earn the right to trade 10 contracts. Okay, crude oil. Market open right at a weekly zone, consolidated as it does 70% of the time, and then ran up to the target, resistance. Now the zone is 83.15/83.20, so it pulled back to support, went back to resistance, back to support, and then put in this high. Look left, you can figure out why it stopped there. Then we came back down, and because we had red and falling, that helped. Now, price sliced through the BBC and hit the zone support, and that bounced it back up to resistance at the BBC, which then pushed it down through the zone all the way down to here. Now, look at the horizontal line on my cursor. This low is that low. Support sends the market to resistance. Resistance sends the market to support. And support sends the market to resistance. Over and over, again and again. Here's where we open. We're trapped. Resistance overhead, support low, support 1, got us above the BBC, and we got a leg, retracement, a leg, a retracement, a leg, and then we traded below the BBC. And we consolidated, and this was just kind of a dogfight, and then we hit the short target pretty much to the tick. Now, this one little candle here opened at 59.2. So let's just call it this little red candle right here. It opened at 24.59. Hang on, let me sure everybody sees it. 24.59. It dropped $300 per contract traded to the target. Apply that times 10 contracts. But whatever you do, if you become a member, you don't start trading live. That's financial suicide. You've got to learn the strategy first. So the blueprint is going to walk you through putting together 10 consecutive days in a row where you reach your goal in 10 trades or less in your demo account. Then and only then will the blueprint give you the green light to go live with one contract. Now that you're trading real money, your goal is to increase your account balance by $2,000 at the rate of $100 a day. Yes, that's going to take 20 trading days. Like I said, you got to show up, you got to do the work. The reward at the end of those 20 trading days, though, is the blueprint will say, hey, you can now add a second contract. Your first contract was funded with your startup capital. The second contract is funded with profit you earned in the market. Blueprint's going to tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. But you only add one at a time when it's time. And you only add with profit you earned in the market. Support to resistance to support to resistance, back to support, back to resistance, back to support, back to resistance, back to support. Futures, stocks, crypto, Forex, ETF, matters not. We opened and consolidated at the zone. We got below blue and climbing, but it never turned to red and falling. And then all of a sudden, price bounced up above the BBC. Now with silver, you only need 2 pennies. So this green candle right here opened at 30.67 and ran up 7 pennies to 74. So that's $350 per contract traded in that one green. Then price got below the BBC. It consolidated for hours at the zone, and then it dropped. Now remember, price rarely travels in a straight line. This came all the way down and then went all the way back up. Ran into red and falling and went all the way back down. This time to and through the target to the zone. Now here's an interesting scenario. The step line is trying to cross red and falling, which is an indication price may try to pull back to the BBC. So this zone is 3012/3013. What if we wait for price to get to 3015 and short it for 2 pennies down to 13 and get our goal for the day that way? What if price runs the other way? Oh, then obviously you don't take that trade. And if price gets above the BBC, got potential resistance at 30.55. You could trade 56 to 58, but I'd just go look for something better. And if you're new to the world of trading, don't mess around with silver. Don't mess around with the NQ. Cut your teeth on something else. And then come back and look at these later if you need to. I mean, you only need one market and you only need one trade setup. And then you just do the same thing over and over every day. But it sure looks like it wants to drop, doesn't it? But we're going to make price prove itself. It's got to break 30.15 before we enter. And if it breaks 30.15, I'd be real surprised if it didn't go to 30.13. Okay. Last market, euro. We opened at a zone, got below the BBC. Got a leg, retracement, leg, retracement, leg, retracement, leg, retracement. Each time, the zone. It was published Monday morning at 6:15 Eastern. And then a drop to the target for consolidation. And looks like it wants to take out these lows. If it does, make sure you don't miss this low. Okay. So there we have it. Price has done what we discussed this morning. It's now resting on top of the daily BBC. We know the pullback holds more often than not, but we haven't had a 50% retracement on the daily chart. I can't even remember the last time. I'm not just talking this year. We've barely been able to get a 24% retracement. I'm not talking extensions, I'm talking retracements. Eventually the market is going to do a 50% retracement. This year, next year, I don't know. I just know that's how markets work. And if you choose to become a member, we'll teach you how markets work. mytradingiq.com. 949-42 Emini, or just send an email to support@cfrn.net and say, "Let me in," and we will. 9 out of 10 new traders fail just because they don't have someone to teach them how to read the chart and then teach them how to trade. You got to be able to read the chart before you get taught how to trade. Now, does becoming a passport holder guarantee you'll be the 1 out of 10? You're going to get all the information necessary to be the 1 out of 10. You're going to get the tools necessary to become the 1 out of 10. But are you going to use them as they're taught? You're going to exercise self-control and discipline? I have no idea. Hope you will. Because if you do, then you will become the 1 out of 10. But I can't promise you will because I don't know if you will. As a passport holder, you not only get 2 hours of live interactive training every trading day, you get one-on-one private mentoring, strategy you learn, the indicators that you own as a passport holder are fluid across all markets and all time frames. As a passport holder, you'll get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones, and you'll be able to attend the members-only workshop on Thursday night. Everything a trader needs, all under one roof. One low. Okay, we're going to wrap it up. A good word for today. Yesterday, we talked about you got to walk out the process. Today, we're going to talk about guarding 3 areas of vulnerability. Now, I know you macho men don't like to admit that you're vulnerable, but you are. In fact, the more you deny it, the more vulnerable you become. 1 Corinthians 10:12. Let him who thinks he stands take heed lest he fall. Remember, God loves a humble man, and he will humble every proud man in his path. Here's 3 areas where we're particularly vulnerable. Discouragement. Number 1. In a moment of discouragement, Peter did what he swore he would never do: deny Jesus. Jesus told him, "You're going to deny me 3 times before the cock crows." For those of you that didn't grow up on a farm, that's a chicken, a male chicken. Okay. And it happened just like Jesus said. You think Peter might have been a little discouraged at that point? Discouragement makes you say things you don't mean and do things that are out of character. That's why Jude writes in Jude 1:20, "But you, beloved, building yourselves up on your most holy faith, praying in the Holy Spirit, keep yourselves in the love of God." Okay. Vulnerability number 2. First it was discouragement. Now it's excitement. Could 2 things be more different? Herod became excited by a dancing girl, threw caution to the wind, and made an offer he lived to regret. We read about it in Mark 6:23. Herod told the dancing girl, "Whatever you ask me, I'll give you. And guess what she asked for? Some of you know. She asked for John the Baptist's head. Now, John the Baptist was locked up in the dungeon underneath the palace. So, this dancing girl. Now, you men out there, and some of you ladies, you've been in those clubs. Maybe not lately, but when you were a younger man. You know what a dancing girl is? Well, if you don't think there was lap dances in Herod's day, better think again. So she asked for John the Baptist's head, and since he was king, Herod couldn't renege on his promise. That single moment of indulgence cost him his kingdom and his life. Be careful where you turn for excitement and how you react when you find it. James 1:15. When desire has conceived, it gives birth to sin. And sin, when it is full grown, brings forth death. Do not be deceived. All right, we've gone from discouragement to excitement. Here's number 3, weariness. In Old Testament times, a birthright meant the oldest son inherited twice as much of his father's estate. Normally, Esau wouldn't have considered selling his birthright, but he did so in a state of exhaustion. See Genesis 25, verses 29 through 30. Weariness can cause you to lose perspective and make decisions based on what feels right in the moment, rather than what's right for you long term. The Bible says all these things happen to them as examples. Therefore, let him who thinks he stands take heed lest he fall. 1 Corinthians 10:11. Dear friends, guard these 3 areas that will make you vulnerable to the work of the enemy: discouragement, excitement, and weariness. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you, His mercy, and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.